Hello, everyone, and welcome to When to Invest in ETFs. I'm your host, Dr. B. Today is episode number 11, January 9th, 2025. Today is a day of memory in honor of former President Jimmy Carter, who lived to be 100 years old. So, this is a special presentation version. We will not be calculating the annual percentage rates of ETFs today. Instead, we're going to figure out when investing doesn't matter who is the President of the United States. So, what you see in front of you is a chart from 1928, the Standard & Poor's 500. The gray bars, those all represent times of recession in the United States. And some of us might be considered a worldwide recession. We're not going to go through all these lines. Since most of my audience listening to me might be under 70 years old, so we're going to just deal with what's going to happen since 1995. Let's look at the Standard & Poor's 500 since 1995. Now, who was the president in 1995? Well, that would be one William Jefferson Clinton. So around 1995, the Standard & Poor's was about 1,000 points. By the time he left office, you can see in his gray area, it was a recession. What was it? What caused a recession? Well, that was the dot-com bubble. So internet stocks burst. Their internet price burst. Their stock price burst, actually. Yahoo.com is an example. You can research that at your own time. At one time, it was a $400 stock. I don't know what it is now. But long story short, when he ended office, the Standard & Poor's was about 2,400. If you take the difference between 2,400 then the 1,000 points he started with, that's the difference of 1,400 points. So if you take 1,400 divided by 1,000 points, then multiply by 100, that means over Bill Clinton's time as president, or the last 5 years, the market was up 140%. After Bill Clinton left office came George W. Bush, the governor of Texas. Well, he inherited a bad economy. The market was going down throughout 2001 and 2002. But in 2001, we had a crisis, 9/11, and then the United States had to go to war. So the market continued going down, but then started peaking up again over time. And then, so what happened over his period of time? Well, he was elected for 2 terms as president. Well, during his second term presidency, you see a larger gray area. That was the worldwide, or especially the United States wide, that was the real estate mortgage crisis, where we had companies that were too big to fail, such as Bear Stearns, such as Lehman Brothers. Well, they failed. And then the market went down. So a lot of people lost a lot of money in the market. And then George Bush, well, let's take a look at the numbers. Overall numbers, he started with a Standard & Poor's of 2,400 points. By the time he left office, it was around 1,300 points. So Standard & Poor's was down 1,100 points. If you take 1,100 divided by 2,400, multiplied by 100, that means the market was down 46%. So to go back up, it has to go back up a lot more than 46%. A lot more than 46%. Try over 100%. And it did go up over 100% with Barack Hussein Obama. So he ran on one word, hope. And yes, the market did go up during his presidency. It went up so much he was elected president for a second term. So during his period, the Standard & Poor's went from 1,300 to 2,950 points. That's a difference of 1,650 points as a gain. So if you take 1,650 divided by 1,300 times 100, that means Standard & Poor's went up 127%. And then after Barack Obama's second term is up, Donald J. Trump was elected President of the United States. And during his time, he inherited a very good economy. But then you can see there's a little blip in there. That was the worldwide COVID pandemic. So the market went down for a short time from March till about May. And then the market shot up again and then went back down again a little bit. So actually, it ended on a good note when I was presidency. The market was up from 2950 to 4500. That's 1550 points or 53%. So here we have 3 out of 4 presidents that the market was up. But then our last president, or our current president right now, Joseph R. Biden, the market did go up after he was in office, but then went down in 2022. Overall, the market has come back up, but during this past November and December and a little bit in January, first 2 weeks in January, we did not get a Christmas rally. No, we didn't. The market did go up from 4,500 points to 5,900. At one time, it was about 6,100 points. But overall, the market is up 1,400 points when Biden took office, and that equates to 31%. So now, on January 20th, Donald J. Trump will take office for his second term as president. What's going to happen during the next 4 years? There's only one answer, and that is to be determined. We don't know what's going to happen in the next 4 years. We hope the market goes up, the economy does well. We do have a lot to improve on as a society, and the world has a lot to improve on. So keep on investing, but there's more things to look at now for the next, not just 4 years, but the next 10 years. And for the next 10 years, what are the expected returns? Management, the expected returns over the next 10 years. This is as of October 31st, 2024. Forecasts contained herein are for illustrative purposes only, may be based upon proprietary research, and are developed through analysis of historical public data. We don't know exactly what's going to happen in the next 10 years, ladies and gentlemen. All we're showing here is we have U.S. large cap equities. Now, I'm not going to go through every single one here, but U.S. large cap and small cap equities, it's projected we're going to have 6 to 6.3% gains over the next 10 years. International large and small cap is going to have between 7.1 and 8.8%. So wait a minute, international is going to do better than domestic? Really? Well, past performance, again, doesn't indicate future results, but what I've seen, international does not do as well as domestic. That's why most of your money should be in domestic. However, if you have a certified financial planner, you probably have money in international. You should. You have to diversify. I have money in international, but let's see what's going to happen next 10 years. I don't think international is going to outdo domestic, so come back at me into year 2033. All right? REITs projected between 6.6 and 7.2%. Treasury, U.S. Treasuries between 3.5 and 3.7%, and cash equivalents between 3.5 and 3.6. Cash equivalents are like money market accounts. Okay, once again, thank you for watching my videos. I appreciate you, and have a great 2025 investing. I'll come back in 2 weeks and show you a different ETF that you may want to invest in.